Well, thank you everyone for allowing me to be the 10-minute speaker for today. A little while ago, I had a call from some clients of mine and they said, Adam, we've got some bad news. And they went on to say that their 14-year-old daughter had been diagnosed with a condition. To cut a long story short, the 14-year-old daughter was very sporty, loved her sport, loved playing soccer. And she said to her parents, I've got a sore right hip. And parents said, oh, you've probably just tweaked something, strained something at training. It will be okay. About 2 weeks later, she was still complaining about her sore hip. So they said, okay, what we'll do, we'll take you along to the doctor. So they took her along to the doctor, and the doctor agreed with the parents. Said, you've just trained too hard. These things take a bit of time. Take another couple of weeks out of training, and you'll be fine. So she did that, but she still wasn't fine after a period of time. So they went back to the doctor, and the doctor said, okay, maybe we need to, it's a bit worse than what I thought it was. I'll send you to have some physio. So the 14-year-old girl, Anna, she had physio for the best part of 6 months. Physio kind of helped, but not really. So the doctor finally said, well, maybe we need to do some more tests. And as a result of doing the test, they found out that she had leukemia in her hip, in her right hip. So they rushed her into surgery and effectively took out her whole hip joint, put it into an Uber, or not quite an Uber, but a medical transport vehicle, sent it off to another hospital where they blasted it with 360-degree radiation, put it back into the non-Uber, sent it back to the hospital while she was still having surgery, reinserted the right hip, patched it up, and months later, she's on the recovery road, which has been absolutely fantastic. But in the interim, what had happened was that her parents had a trauma insurance policy. As part of that policy, there was a small inbuilt free children's cover. So that claim was paid out to the parents, and what that allowed the parents to do was take an extended amount of time out of work and not have to worry about the financial situation whilst their daughter recovered. So I'm Adam, I'm from Advice First. I'm passionate about what I do, and I'm passionate about what I do because I really do care about making a difference in people's lives and being able to help people. So I guess, how did I end up here? How did I end up sitting in front of the TNG group this morning or this afternoon doing my 10-minute presentation? Well, I guess it takes me back a few years to Wellington. I was born and raised in Wellington. I lived in Wellington until my early 20s, and at that point, I was still living at home. And I was kind of bored with the general scene of Wellington and everything else. So I thought I'll move up to Auckland for 6 months or 12 months. So I moved up to Auckland. I didn't know anyone. I thought I'll end up back in Wellington by this time next year. 16 years later, I'm still in Auckland. Outside of work, I'm very passionate about sport, love my sport, love playing tennis. I'm usually playing maybe 2 or 3 times per week. Obviously not on level 4 or level 3, but hopefully in the next few weeks, I'll be back out on the tennis court. And love sport in general, and if any of you also like sport, more than happy to have a conversation at some point in person over any sport. With regards to my career, once I finished studying, I wasn't sure what I really wanted to do. I knew that I wanted to do something that involved the business world and also something whereby I could actually make a difference in people's lives. And the insurance industry came along, and it wasn't something that I was particularly interested in doing, and like a lot of people, I guess, in the industry fall into it, but I fell into it and quickly realized that I actually enjoy it and it ticks the boxes that I was looking for. Over my years of being in the industry, I've worked for a large insurance company, I've worked for a large insurance broking company, I've worked for a smaller family-based business, I've also run my own business. And then 3 years ago, I joined with a company called Advice First, and then Iconic, which is a name that you probably will be familiar with as well, merged together. And I'm a financial advisor with Advice First. With insurance, there's really 2 sides to it. On one side of the fence, we have what we call fire and general insurance. That's things like your house insurance, contents, from a business point of view, things like asset insurance, plant, machinery, stock, liability insurance, professional indemnity insurance. The list really goes on. On the other side of the fence is what we call risk insurance. So risk insurance is things like life insurance, trauma insurance, medical insurance, income replacement. And from a business point of view, it's things around like loss of revenue cover, key person insurance, shareholder buyout cover. Over my number of years of working in insurance, I have sat on both sides of the fence, so the fire in general and also the risk side. Predominantly more on the risk side. Where my passion is on the risk side of the business, and that's what I'm doing now. So purely around the risk insurance side of the business. But I know and still remember enough around the fire and general side to be dangerous and sometimes maybe a little bit too dangerous. I guess I want to share two questions today, two questions that clients ask me a lot, and very, very common questions. And the first question that clients often say is, why do my insurance premiums go up every year when my sum insured stays the same? I'm talking about the risk insurances here, so things like life insurance, trauma insurance, income protection, and so on. And the simple answer to that question is age. The reality is, as we get older, the premiums get more expensive, even if the levels of cover never increase. And these premiums just don't stop when you retire. They continue to go up. So the premiums will continue to rise every single year, regardless of whether someone's 60, whether someone's 70, whether someone's 80, who still has some cover in place, it will still increase along the way. But what not many people know is that premiums don't have to actually increase all the time. So most clients are on what we call step premium or age rated. So those are the ones that will constantly go up as we get older. There is a second option called level premium, but not many clients know about it, and certainly not many clients are on a level premium contract. A level premium, purely as the name says, means that premiums don't go up next month. They won't increase next year. They won't increase in 5 years' time or 10 years' time. They are level for the duration of the policy. And a couple of advantages of this is that it allows clients to budget for those premiums, and it also helps with affordability, particularly when clients get older. And the longer someone has a policy that's on a level premium in place, the greater the benefit they get. And certainly clients that have utilised it have certainly been able to keep the insurance for a much longer period, and also is a lot more affordable over the long run. So that is something that some clients do look at, and a question that comes up a lot. And then the second question that comes up a lot is, do I really need to review my insurance policy? Again, the simple answer of that is yes, you do. If you all were to think back 5 years ago, what were you doing 5 years ago? Were you in the same, did you have the same business? Were you in the same role? Were you in the same house? Did you have the same assets? Did you have the same level of debts? Has anyone had any family? Has anyone been in the unfortunate event of losing a family? I'm sure all of our lives 5 years ago are different, even if it is just by a little bit, than they are today. Therefore, for clients, it's extremely important to constantly review their insurance policies. What most clients do is they get a policy like this. They kind of know what it is at the time. They drop it into the bottom drawer somewhere, gathers dust, and it sits there for 10, 15, 20 years' time. Don't really know what it is, don't really know what it does, don't really know how much cover I've got. But one thing that they do know is that if they ever have to claim, it's unlikely the insurer will pay the claim because they'll try to get out of payment. That is what clients often tell us. So it's extremely important to review insurance to make sure that it's still relevant for someone's needs. And a lot of people that I talk to say, we don't want to have a review because we don't want to have to buy more insurance, because our past experience, if we do have a review, we walk away from that with the advisor saying you need to increase your cover or we need to move it. Whereas the reality is that's not always true. In fact, that's probably only about 10 to 20% of the time that actually happens. For me, it's about educating the client to know what they have, how it works, and then thirdly, how it would respond in the event of a claim. And sometimes that means for clients to actually reduce the level of cover because they no longer have the debt, they no longer have the children still at home who are financially dependent on them. It's actually a case of reducing the cover and they save some money. So a review can work both ways, but it is extremely important for clients so that these policies don't just end up in the bottom of someone's drawer. I guess, who do I want to help? I want to help mums and dads right through to businesses, anyone who does have one of these lying around in their house that they haven't looked at over the last 5 years. And it's not a case of making changes, but a case of educating clients so they understand what they have, how it works, and whether it's still relevant for their needs. I'm Adam from Advice Works. Thank you.
Thank you, Adam. It was great. Is there anybody have any